Hello, my name is Barbara Wary, Senior Financial Consultant with IG Wealth Management. First and foremost, I hope you and your family are staying healthy and managing during this difficult time. Like you, I'm concerned for the wellness of my family, my clients, my community. So we've moved to a work from home environment. And as such, I'm reaching out to you in a unique way today. As we all do our best to stay well, we try to follow the advice of health professionals to eat properly, get enough sleep, exercise, and manage our stress level. Like you probably are too, I'm also looking for positive things to look at, read about, hear about, and laugh about. Health is the first and foremost on all of our minds, but money and our financial uncertainty can be an added stressor. We want to alleviate some of that stress for you by sharing how we have built your personalized financial plan to include strategies that address risks to your long-term goals. We can't control what happens in the markets over the short term, but if you understand how we manage your plan and your portfolio to meet your long-term objectives, you can face the future with confidence and stay the course. As market volatility increases, investors typically want to move into safer investments, hoping to avoid further losses. Reacting to short-term market noise by making emotion-based portfolio changes can interfere with achieving your long-term goals. History shows that by maintaining discipline and perspective during market downturns, a patient investor is often rewarded when the markets return to an upward path, which they always do. 2020. This has been quite the year. Pure madness. This year, we are experiencing significant volatility as a result of the global health pandemic. This event has created uncertainty, and during uncertain times, the world stock markets tend to decline in the short term. That's why it's so important to have a diversified investment portfolio. When you diversify globally as well as by asset class, it creates stability in the portfolio during times like we're experiencing today. As highlighted on the slide, the broadest Canadian stock market, represented by the S&P/TSX Composite Index, was down more than 21% at the end of March. However, many of our managed solutions were only down by a fraction of that amount. Proper portfolio construction reduces risk and provides downside protection. For the last 11 years, we had been enjoying one of the longest economic expansions and strongest bull markets in history. But you wouldn't have known that back on March 9, 2009. On that day, the S&P 500 index was down by 50% from its previous high, and many people believed that capitalism had failed. Taxpayer dollars were being used to bail out the global financial system, and the forecast for the future was bleak. There was little optimism for the stock market as it was believed that economies wouldn't grow for many years to come. Since March 9, 2009, investors have lived in constant fear of the next financial crisis. Over the years and over the decades, we have endured many events that seemed to be at the time permanent barriers to future financial success. Every time, markets initially decline and then eventually rebound, and it seems to new highs. As the graph demonstrates, the S&P/TSX has delivered an annualized return of 8.93% since 1956, and it has proven to be resilient through the worst market conditions. Over the same period of time, there have been many instances where the S&P/TSX declined by more than 10%. This chart illustrates that this has happened 24 times since 1959, yet each time the market recovered and achieved a higher level. Throughout history, equity markets have always experienced periods of volatility. Despite this, they continue to be resilient. Staying the course is extremely important during times of volatility, as this disciplined, patient approach enables investors to fully recover to achieve their long-term goals. I'd like to ask, if you could go back and do something different, say March 2009, what would you do? Like me, you probably wish that you had invested more then, at the bottom of the market. But it was a scary time, and then markets and economies recover, as I believe they will again. Many of the strongest market returns occur in the period immediately following a sharp decline. Since 1950, following the worst 12-month period of performance by the S&P TSX, the markets made solid gains in just 12 months later, with only one exception. And within 5 years, the markets were up significantly, meeting and exceeding long-term rates of return expectations. In order to take advantage of those returns, it is important for investors to continue focusing on their long-term plan, staying the course, and remain invested. Those who panic and exit the market, even for a short while, risk missing great opportunities when markets recovered. Staying invested is key. The IG Living Plan, we use 5 principles within this plan when we look at your investments. Let's use time to your advantage. Let's make sure that your portfolio is properly diversified. Let's avoid emotional decisions, maintain a long-term focus, and of course, stay invested. Using time to your advantage. Investing in the long term is one of the best strategies for offsetting the impact of short-term market volatility. This approach will help you participate in stock market growth and achieve positive results. The probability of negative returns in the short term is relatively frequent. This chart illustrates that. But more importantly, the possibility of earning a positive return greatly increases the longer you are invested. It's not about timing the markets, it's about time in the markets. Markets are unpredictable in the short term, but quite predictable in the long term. A diversified portfolio provides clear expectations. Investing in a diversified multi-asset portfolio removes the guesswork of how to successfully invest for the long term. As you can see from this very busy chart, in many instances, the top performing asset category changes every year. As well, asset categories that are amongst the best one year could be amongst the worst the next, while others, like a moderate portfolio, can remain somewhat consistent year over year. By diversifying across different asset classes and investment styles, we can offset overall risk and increase portfolio returns by balancing exposures in both positive and negative market environments. Because it can feel a little bit like a roller coaster. By carefully diversifying your portfolio, we can reduce your risk and enhance your chances of success to achieving those long-term goals. The paradox of emotional investing is when you feel the worst, it's often the best time to buy. More than 2/3 of the years since 1948, the S&P TSX has experienced positive years. Most of the time, the return is within the 0 to 10% range. I would like to bring your attention to 2008, when the S&P TSX declined by 33%. And then it reversed course in 2009 and landed on the opposite side of the graph with a gain of 35%. Generally, negative returns tend to be followed by positive returns, and these positive returns are typically greater than the negative returns. That's why it's so important to stay the course. Let me show it to you in another way. Market volatility and declines are uncomfortable. Looking at a down statement is uncomfortable. But it's important to have this perspective. Let's take a look at this chart. What if you miss some of the best market days? This looks historically over the last 30 years at the S&P 500. What if you missed a few good days? This chart clearly demonstrates that those investors who can focus on the long term and stay invested will stand to gain. For example, an investor who remained fully invested in this S&P 500 index from January 1st, 1990 to December 31st, 2019 realized a 7.7% annualized return, excluding dividends. Conversely, an investor who missed the 50 best days of the S&P 500 over that time period, that's missing only 1% of the trading days, realized an annual compound return of negative 0.4%, again, excluding dividends. That is why timing the markets is almost impossible. You need to be right twice, when to get out and when to get back in. And that's next to impossible and dangerous too, as you may miss 1 or 2 up days that can make all the difference. A combination of discipline and perspective is key to reaching your long-term investment goals and your overall financial goals. In contrast, obsessing over daily market fluctuations and the short-term noise can be a surefire way to fall short of your goals. No fun at all. One way to achieve the fine balance is to have a long-term plan, and most importantly, stick to it. Well, this might sound simple. What we're all going through right now, market volatility, social distancing, feeling isolated, health concerns, it's all putting us to the test. We are scared for our loved ones, our community, our futures. It is even more important to keep our eyes on what we can control. We are here to support you and help you keep your focus. Your IG Living Plan is developed with a holistic viewpoint and is synchronized across all aspects of your financial life. We will continue to work closely with you to update your plan, do everything possible to maximize it however we can. We are working hard to protect your nest egg and your future. We're in this with you. From our top-tier investment managers and global asset partners, our in-house specialists and professionals, and of course, your team, my team, we're all here for you and working hard for you to create and maintain your best financial plan, one that is suitable to your unique circumstances. Our team works together to produce not just good, but extraordinary results. We take coordinated action. We work with your specialists. We work with our specialists. We work with you. We adjust. We adapt. We have the ability to move faster as conditions dictate without losing intelligence, discipline, and focus. Trust me when I say your investment management team is working around the clock to find opportunities which these unique conditions do provide. They can move quickly, get some good buys and bargains, and we do so with complete conviction and confidence. It's important not to be distracted by the headlines, daily news, and constant fluctuations in world stock markets. Easier said than done. But why don't we remain focused and keep our focus on your IG Living Plan? Your plan should be reviewed on a regular basis. You know that. I've told you that. But especially during times like today, we want to ensure that you are on track to achieve your specific goals and dreams. Your plan will provide clarity on how to stay the course and capitalize on attractive opportunities as they present themselves. Your regular investment statements serve as a snapshot of one moment in time. For example, you will soon be receiving your investment statement for the end of March, and will show you the value of your portfolio on that day. During market downturns, it's natural to feel nervous or unhappy if you see a financial loss on your statement. It's uncomfortable. But remember, it's just a moment in time. We definitely know how you feel, but we also want to remind you that this loss exists only on paper and is not realized until a decision to sell is made. So a loss is not a reality until you actually sell. And as your plan has been designed for the long term, our recommendation is to resist reacting. Stay focused on what you can control and let us help with the rest. Why do we build a stress test into your financial plan? For times like these. We test hundreds of different market conditions for your plan to determine the probability of its success. This technology is available to you, and we can use it to see where you stand today. Why? Because most projections that are created by other softwares only use averages. They might use, say, 5% return each and every single year. But we know this is not a reality. We are experiencing that it is not a reality. Last year was a really strong growth year. This year, it appears that we might have given back some of those gains. Some years you'll be higher than 5% return, and other years it'll be lower. In other words, you will experience fluctuations in returns from year to year. These fluctuations, what we call the sequence of return, matter. Our focus is to get your plan to as close to 100% as possible, which help you look towards the future with clarity and confidence. Over the course of the years that we invest, there are only a limited number of times when major market corrections will lead to highly attractive investment opportunities, and we believe that this is likely one of those times. As legendary investor Warren Buffett has been known to say, be fearful when others are greedy, and greedy when others are fearful. Quite often, when markets appear to be their bleakest and everyone is panicking, a focused long term investor stands to benefit the most. As we go through this difficult experience of COVID 19 and its profound impact on our lives and the global economy, things might seem overwhelming from time to time. I am grateful to have the support of my team, shown here on the slide, my team around me, my family, IG Wealth Management, and our investment advisors. They're helping me cope with any fear and stress I might have. And in turn, this support gives me strength to continue focusing on your well being. I feel we are well positioned to withstand these challenging times, and I truly want you to feel confident in the rigorous planning we have done as we work together to meet your long term goals. Thank you so much for your time. I hope you and your loved ones stay safe and healthy.